Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 17th of May. I'm Daniel Lam, your host for the podcast. I was quoting some movies from the early 1990s during my interview with the sports page of a local newspaper regarding chess at the Asian Games. The reporter said that she didn't know about that movie because she was not even born when the movie was made. So I took that with a good laugh and also realizing my age. It was really a case of reality bites. And yes, that was a cult classic movie from 1993 with Ethan Hawke and Winona Ryder. In finance, yesterday we did have a case of reality bites in the form of Chinese data from last month. In short, the data was weak, and the set of data may have confirmed that the peak reopening impulse is now behind us. For example, fixed asset investment came in at 4.7% year-on-year, and an expected slide from March 5.1% year-on-year. Industrial production were below expectations too, actually by a wide margin, at 5.6% year-on-year versus expectations at 10.9%. Finally, retail sales missed at 18.4% year-on-year versus expectations at 21.9%. Now, with China out of the sweet spot from reopening, we really need to see some government actions in order to stimulate the economy. As we discussed in the podcast this Monday, we're expecting more targeted measures to boost sentiment and youth employment and revive private sector business confidence. Now, over the last 48 hours, the Hang Seng Index did test the 19,000 to 19,500 support zone that we highlighted in the podcast this Monday. The index rebounded sharply after, but it experienced sell-off and failed to conquer the resistance level at 20,300. Now, for most of the past 4 weeks, the slower sectors, such as telecommunications and financials, were leading the index. But then they have been tiring out. However, there has been positive technical signs emerging in the Hang Seng Technology Index, which comprises of the key Chinese internet stocks. For example, its relative strength indicator, RSI, has begun to edge higher, and that's despite the index testing its support level. This shows diminishing strength in the selling of the internet stocks, which is usually a technical prelude to potential recovery. Thus, investors should consider accumulating the China internet stocks, which are in the consumer discretionary and the communication services sectors, the two sectors that we're overweight on. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.